Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage Eitel.
All right. My name is Mark Eitel, and this is the Mr. Mortgage Show. And guys, you are in the right place if you want the answers to your questions, the data, not the crazy headlines, but the real data, the tips, the tricks, the strategies, the information that you need so you can go out and make better real estate and mortgage decisions for you and your family. Guys, we do this each week right here, same bat time, same bat station, and I am super wound for sound this week. Very highly caffeinated and ready to go. Man, we had a lot of interesting data released this week, and we're going to deep dive all of it and try to make sense of what's going on out there, because a lot of the headlines contradict one another. And I find it totally fascinating how you can scroll through one or more news outlet websites and see one headline after another that are totally conflicting one another. And it's just super confusing. So we're going to try to clear the way for you, if you will, and make sense of all of it. And guys, if you've got questions or comments, just give us a call, shoot us a text to the Anytime hotline. That number is 855-462-7292. That's 855-462-7292. That is the Anytime hotline. And Jen, my producer, is standing by, womanning the hotline. She'll get your questions on the air. Or if you prefer to shoot us an email, just visit MrMortgageRadio.com. That's MrMortgageRadio.com. Scroll to the bottom of the page, click that email icon, and you can type in your question there, and Jen will read it on the air for you. But guys, man, another crazy week, right? Mortgage applications fall because interest rates rise. I don't think that's a surprise to anyone. But the last month's new home sales were up. That data did surprise a few people, and the home builders are coming out of this tight inventory market as big winners. And if you're buying a property right now, new construction may be a great place to look, because the builders are offering incentives and rate buy downs. And think about it for a minute, folks. They've got a profit margin built into that house that they're willing to dip into a little bit to buy your interest rate down. And I mentioned interest rates have been on the rise again this week, and we hit that 7% interest rate mark again on Wednesday. And every time we hit that number, things seem to slow down a bit, and the data supports that. Well, we're using that buy down strategy that we talk about all the time to get our clients a better interest rate, and builders have that margin built in, and they're offering that as well. So when you're buying new construction, you can negotiate with the builder to pay rate buy down, and a lot of people are taking advantage of that, as well as other builder incentives. And guys, that's not a blanket statement across the country, because there are some markets that have so little inventory that the builders are holding their ground with price and incentive. But in a lot of markets, they're willing to give up a little bit of that profit margin as material costs have come back down, the supply chain opened up a bit. They've got a little bit of money in there that they're using to incentivize buyers with, and it's a great opportunity if it's something to be considered. And guys, we talk about that from time to time, that this is for informational purposes only, because I do not have a crystal ball. But the new home neighborhoods are a little bit more insulated from a dramatic price reduction, because the vast majority of the people entered the ownership at about the same price range. So think about that for a minute, guys. If there are 100 homes in a subdivision and they sold out over an 18-month period, well, those 100 families paid about the same price for that home. It's logical to assume the people at the end paid a little bit more. But if you take a sampling of an old neighborhood, say that was built in the 50s, Some people might own from inception, and they might have bought that property for $45,000, and the most recent person might have bought that property for, say, $350,000. Well, that guy, that high-end guy, the most recent person into that neighborhood, is a little bit more exposed to a potential reduction in price because those original owners could sell for far less than he paid or she paid for their property and still make a handsome profit. So when I say the new construction neighborhoods are a little more insulated, it's because the owners don't have a dramatically different entry point into the neighborhood from a cost perspective. So because of that, somebody can't take a wildly discounted price and still make a profit. They're less likely to discount their price. So just food for thought. If anybody has questions about that, we talk about it a lot. And in the markets that we operate in, there are some neighborhoods where maybe only 20% of the neighborhood is traded at these record high prices. The other 80% own their properties for far, far less, and they may be able to sell at a lower price and still make a handsome profit. So there's a little more risk associated with a downturn in a neighborhood like that. Just again, this is generally speaking for informational purposes only. It's an observation that we've had. I'm not saying that a new construction neighborhood cannot suffer severe price declines if the market was to crash. I wanted to share that because I find that interesting, right? So I'm throwing that out there. If anybody has questions or comments about it, we can dive into it. But, it's like that Hank Williams song this week, Country Boy Can Survive, right? Interest rates are up and the stock market's down. You might get mugged if you go downtown, I guess is the rest of that song. But, everybody's kind of cautiously watching what's happening with the chess match in Washington about the debt ceiling. I don't think anybody believes the government's going to default, but it's kind of that who's going to swerve last, right? It's the ultimate game of chicken. And interest rates and stock prices are the victim of that game until we get past it. So it's an interesting world we live in. But guys, I talk about it all the time. Interest rates should not be the deciding factor when you're buying real estate. And I know it's frustrating when rates climb, you can borrow less for that same payment, but that payment's the important thing. So we're still working with a lot of buyers today who are excited about the opportunity, and we're using rate buy down strategies. But my point is they're focusing on the budget. So if, rent in their area is $2,000 a month, they're looking at what they can buy for $2,000 a month, and if it makes sense, they're making that move. So I encourage everybody to focus on what's most important, and that's the budget. It's not the interest rate. And then pick a budget that makes sense for you. Don't go to your max qualifying number because things are going to get uncomfortable in a hurry. If your goal budget is $2,000 a month, well, stick to $2,000 a month and see what you can buy for that. You never can anticipate all of the costs of ownership, especially if it's your first time. So I encourage everybody to focus on that number and then stay true to that number, because only you know what you're comfortable with. We don't. We know what we can approve you for, but that's not always the number that you're most comfortable with. So guys, you hear the music, you know what that means? That's my cue. We'll be back in a few. We're going to jump into a very, very short break. And on the other side of this break, we're going to dive into your questions, deep dive the data, and continue with the Mr. Mortgage Show. Sit tight. We'll be right back.
Have you recently experienced a shocking rate increase on your homeowner's insurance policy or received a dreaded cancellation notice? It feels like you're being priced out of your own home, doesn't it? Well, worry no more. Introducing HOIPolicyReview.com, the website designed specifically for people like you. We understand the frustration and financial strain these situations bring. That's why we're here to help. With HOIPolicyReview.com, all you need to do is provide us with a few details about your home and current policy, and we'll take care of the rest. Our team will tirelessly compare dozens of carriers against one another, ensuring you receive the best quote possible. Don't let rising rates or cancellations force you out of your home. Visit HOIPolicyReview.com today to take the first step towards securing the insurance coverage you need. So don't wait any longer. Go to HOIPolicyReview.com and get started today. Remember, we're here to help you find the insurance solution that fits your needs. That's HOI, policyreview.com.
Let me tell you a little story about a man named Jed. Well, this is not a story about Jed, but it is a story about Mary. Mary is an awesome single mom who's been raising her daughter in a 1-bedroom, 1-bath apartment for the last 11 years. That's right, 1 bedroom and 1 bath. Hey, they've made the best of it. They've got bunk beds in there and it's worked. But her daughter's now a teenager and it's becoming a challenge, especially sharing that bathroom. She decided to jump in and become a homeowner. We got her approved with an FHA loan. That's right, I said it, FHA. Hey, if your agent's telling you FHA and VA loans are not getting accepted, you are working with the wrong agent. Contact me and I'll get you in touch with a really great agent. Hey, but back to Mary. She jumped in and she is now a proud homeowner. They have their own bedrooms, but more importantly, their own baths. They couldn't be happier. Guys, if you'd like to learn more, check out MrMortgageRadio.com. That's MrMortgageRadio.com. My name is Mark Eitel, NMLS 1929005. Check us out at MrMortgageRadio.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are locked and loaded right here at the Mr. Mortgage Show. Guys, thanks so much for spending a little bit of your day with us. You know how much I enjoy our time together. If you've got questions or comments that you want to get on the air, you know you can call 855-462-7292 or send a text. Call or text 855-462-7292. That is the Anytime hotline, and Jen is standing by, womanning the hotline. She'll get your questions on the air. 855-462-7292. Or if you prefer, shoot us an email by visiting MrMortgageRadio.com. That's MrMortgageRadio.com. Scroll to the bottom of the page, click that email icon, and you can send your questions over that way. But guys, we are off and running. I know we've already gotten a few questions in, so I'm going to toss it over to Jen, and let's start taking your questions. Hey, Jen, go ahead, shoot me a question.
Bonnie sent us this. I'm surprised to see interest rates back on the rise. Why do they move so much? Is there a best time to get a good rate?
Hey, Bonnie, that's a great question. The interest rate market it's interesting because we'll go through a period of time for, several weeks where they move very, very little. And then we'll go through a period of time like the last week or so where they've moved quite a bit in relation to where they started. So mortgage interest rates are not controlled by the Federal Reserve. And a lot of people get confused by that because we associate that interest rate move that the Fed announces either up or down as what controls the rates, and it's not that. The mortgage-backed securities market is what controls interest rates. So lenders lend money and then they sell the mortgage so that they can recapitalize and loan you more money, and they issue securities against that mortgage. It's called securitization, and they'll securitize a pool of mortgages, sell them on the secondary market, and what that market dictates as the price dictates the interest rate. That determines the cost of capital from the lender's standpoint, and then influences how much they're charging you when they're loaning you money. So if the mortgage-backed security market is yielding a lower interest rate on that buy and sell transaction, that's going to equate to a lower interest rate for us as borrowers, and vice versa. And that's what we've seen lately is a higher interest rate on that secondary market, and that's what's influencing our cost. But guys, it's super, super confusing. There's great websites out there that track it daily. One is called Mortgage News Daily. But I encourage you not to look too closely at it because we talk about it a lot. Trying to watch daily moves in the interest rate environment is way too technically advanced for us that when we're trying to buy or sell a house, because if interest rate is the deciding factor. Now, that being said, if you have a choice of a 3% or a 7% interest rate, absolutely, I can understand that. But the difference between, 6 3/4 or 7 or 6.5 and 6 3/4, those small changes in the interest rate environment should not be the deciding factor when you buy or sell real estate. But we can cover that in detail if anybody has questions. Focus on the budget. That's I talk about all the time. What's that monthly payment? So, but brilliant question. I love geeking out on that. If you want to deep dive it with me, give me a shout off the air and we can talk about it in depth. But great way to start the show. I appreciate that one. Hey, Jen, do we have another question? What do we have?
Melissa has this question. Is it possible to get a regular mortgage on a mobile home? I know there are some restrictions, but I'm finding conflicting information online.
Hey, that's a great question. And it's interesting with where home prices and home values have gone. The manufactured homes, or as some people call mobile homes, that's becoming a viable option for a lot of people in the first time home buyer, or actually even in the move down world. There's some neighborhoods that, $200,000, $300,000, $400,000 manufactured homes on the golf course. It's mind blowing to see where we are overall with property values. But to answer your question, yes, you can get just about any mortgage type on a manufactured home, assuming a few things, right? It's got to be newer than, I say 1977 to play it safe. We all know it's technically the summer of 1976. So newer than that. Some lenders require single wide versus double wide, but those are overlays and not guidelines. So FHA, VA, USDA, as well as conventional programs are available for those homes that meet those requirements. And then the big one is you have to also own the land, right? In some manufactured home neighborhoods, you rent the lot, but you own the structure. Those aren't eligible for a traditional mortgage. There are other loan products available in those instances. So here's one thing that's super exciting if that's a world that you operate in. And a lot of real estate agents who sell manufactured homes aren't even aware of these new changes, but there are some new loan programs that will allow older than 1976. Older than 1976 traditionally hasn't been something you can get a mortgage on. Well, now you can. It may require, depending on your credit score and the property value, a little bit of a larger down payment, but those programs exist. Another place where there was rarely, outside of the VA world, mortgage options available is what's called a second set, meaning the property, or the building rather, was moved from its original installation to a secondary installation. And even though it's done with building permits by licensed people and to code, in the past that wasn't financeable. Well, now second sets are financeable. So, and there are loans available for those circumstances where you don't own the land. So I think as a byproduct of where the housing market has gone, we're seeing a lot of options in that world that we hadn't seen in the past. So brilliant question. I appreciate that one. I hope that answers it. It's definitely wild to see where home prices in general have gone to where now that manufactured home option is making a lot of sense for a lot of people, both in the beginning and the end cycles of ownership. So brilliant question. Guys, if anybody out there needs information regarding that, just call us or text us. I'm always happy to have a conversation and help you figure it out. There's a lot more programs available than most people are aware of. But hey, anyway, you hear the music, you know what that means? That's my cue. We'll be back in a few. Sit tight on the other side of this break. We'll be right back with more of the show. Hey, it's Mark Eitel, host of the Mr. Mortgage Show, and I'm going to interrupt this commercial break to ask you for a favor. If you know any friends, family, coworkers, or the guy in front of you at the grocery line who's talking or thinking about buying or selling or refinancing real estate, I'm hoping I can count on you to help me spread the word, introduce them to me, to the team. You can do that by simply sharing MrMortgageRadio.com. That's MrMortgageRadio.com. Guys, it's Mark Eitel, NMLS 1929005. Now, back to the commercials.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
So you think interest rates have gotten too high to refi? Well, not so fast. There are several reasons people refinance. Sure, lowering your interest rate is one, but there's debt consolidation, home improvement, unexpected medical expenses, pulling out some equity to go buy an investment property. Heck, I even know of one guy who refinanced his house so he could buy his mistress a condo. But let's jump back to debt consolidation for a minute. I'm working with a client right now. His name is Ben. He's going to refinance his house, pay off a host of credit cards, and 2 truck payments. And yes, his mortgage interest rate is going to go up, but his monthly expenses are going to go down significantly. And that monthly savings is going to get he and his family back on track. Guys, if you've got questions, check us out at mrmortgageradio.com. That's mrmortgageradio.com. My name is Mark Eitel, NMLS 1929005. I host the Mr. Mortgage Show, and we are always here and happy to help. Check us out at mrmortgageradio.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. Guys, if you've got questions or comments, just call or text 855-462-7292. That's 855-462-7292. That is the Anytime Hotline. Jen is standing by, womaning the hotline, and she'll get your questions on the air. Again, that number is 855-462-7292. Or if you prefer to shoot us an email, just head on over to mrmortgageradio.com. That's mrmortgageradio.com. Scroll to the bottom of the page, click that email icon, and you can shoot your questions over that way. And hey, guys, if you haven't visited mrmortgageradio.com yet, check that website out. We've got links to our Facebook group, to the YouTube channel, to all of the back episodes of the radio show. They live on the internet as a podcast, and it lives out there forever. There's a lot of great info at mrmortgageradio.com, and you can reach out and engage with us during the week. So anyway, I encourage you to check that out if you haven't, and I'd love to know any thoughts or questions that you have around it. But anyway, speaking of thoughts, speaking of questions, I'm going to throw it over to Jen. We started with some great questions so far, and let's see if we can keep it going. Hey, Jen, do you have another question ready?
Sydney is asking, are there any true no-income verification loans anymore? I have good credit and make decent money. I just can't document my income.
Hey, Sydney, that's a great question, my man. And assuming that's a male Sydney, I guess that is a unisex name, right? One of my very, very good friends early in life, his name was Sydney. We called him Sid, so my mind went to the male Sid. But if you're a female, great question, ma'am. I appreciate it. Anyway, let me answer that. So, Sydney, yes, there are some no-income verification options out there. And before we get into those, there are also programs available using your bank statements to determine income verification. And we've talked a lot about that in the past. So the hierarchy, if you will, of income verification may go something like, fully documenting the income, either a W-2 employee, 1099, or self-employed, fully documenting the income. Then from there, if you can't fully document, you're self-employed and you write a lot of your income off your taxes, so the tax returns don't have an accurate depiction of your buying power, if you will. So if that's the case, there are programs where we can take averages of your deposits and apply a factor to them, and with that determine a verifiable monthly income. Sometimes that works. Sometimes that's still not enough. And then there are some true no-income verification programs where, assuming that you have the credit, some of them rely solely on the assets. Do you have enough money to pay cash for the property? Then boom, there's a program available that way. There's what's called an asset depletion model. They apply an annual reduction in your assets, and that happens if somebody is living off a pile of inherited money or whatever the case is. So asset depletion can be used to determine an income. And then there are some programs that are only looking to confirm that you've got enough to make the down payment and 12 to 24 months worth of reserves, typically 12. So here's a scenario. If you can put 20% down and you've got enough money in the bank, reserves for 12 months of expenses, then there is no income or employment necessary for that program. And that's called a community program. So there's a variety of no income verification. Now, in all of those scenarios, they require a down payment, unlike the craziness that we saw in the early 2000s, which led to the housing crash and the Great Recession. These programs are far more conservative because they're looking at your assets and they're requiring a down payment. So brilliant question. But to answer your question, yes, there are no income verification options out there. I hope that helps. I'd love to talk to you more about it if you need more info, but that was a great question. Hey, Jen, do you have another question?
Peter.
Who?
Peter sent us this text. Is there an easy way to find homes that are in foreclosure? I see some on Zillow, but when I call the people, they tell me they're not late on their payments.
You made both of us laugh with that. So, Peter, I'm kidding. Peter, thank you for that. So here's the thing. So yeah, I don't know where Zillow gets that data. I see that on there too. I think what it's doing is it's pulling list pendants from the tax rolls. And a list pendants doesn't necessarily mean it's a foreclosure. And I might be wrong. That might be... it might be a different data source that they're getting that information from. But a list pendants is basically, it's a document that announces to everybody publicly that someone is going to file a lien against title or make a claim against title. So list pendants can be anything from contractors who weren't paid all the way up to a foreclosure. So, but it doesn't surprise me that people would say that they're not late if you're just calling them out of the blue, because most people are very embarrassed and slightly defensive. And if you're calling them up trying to, in their minds, take advantage of a situation, they're going to be standoffish. Most people aren't ready to throw in the towel in that circumstance if it's just a list pendant. So, but I would encourage you, if that's what you're interested in, if you're looking to buy pre-foreclosures, if you will. Although last week we talked about the delinquency data was the second lowest month ever reported. So there are far fewer people going into foreclosure than most people realize. But again, if that's your market and that's your strategy is to try to pick up some deals, you can typically go to your county's website, clerk of court, and look for list pendants that were filed, and then cross-reference that list against who filed those list pendants, because if they're lenders, it's likely to be a foreclosure. And then you might make a phone call that's something to the effect of, hi, I was researching homes in our area. I was on the county website. It looks like XYZ Bank is filing a lien. I'd love to talk to you about possibly buying your property if this is something that you're interested. I don't know. That's not a market that I participate in, but I would imagine if you called somebody and you were referencing real information, they might be more adamant to have the conversation. But guys, I think with the amount of equity that's in the market right now, it's going to be difficult to bottom feed foreclosures, because most people have so much equity that if they're in a situation that's a pre-foreclosure and they can't work it out, that they'll likely just put the property on the market. And that being said, I know some real estate agents who specialize in researching that list pendants data and contacting people and assisting them with selling their property at full market value so the people can benefit and not have to take a last minute discounted offer. So anyway, brilliant question, and I hope that helps. But research the county records, look for the clerk of courts for that foreclosure activity. if it's filed, then it'll be in there and you can start your search that way. But great question. Good luck with that. Hey guys, you hear the music, you know what that means. That's my cue. We'll be back in a few. Sit tight on the other side of this break. We'll be back with more of the show.
Have you recently experienced a shocking rate increase on your homeowner's insurance policy or received a dreaded cancellation notice? It feels like you're being priced out of your own home, doesn't it? Well, worry no more. Introducing HOIPolicyReview.com, the website designed specifically for people like you. We understand the frustration and financial strain these situations bring. That's why we're here to help. With HOIPolicyReview.com, all you need to do is provide us with a few details about your home and current policy, and we'll take care of the rest. Our team will tirelessly compare dozens of carriers against one another, ensuring you receive the best quote possible. Don't let rising rates or cancellations force you out of your home. Visit HOIPolicyReview.com today to take the first step towards securing the insurance coverage you need. So don't wait any longer. Go to HOIPolicyReview.com and get started today. Remember, we're here to help you find the insurance solution that fits your needs. That's HOIPolicyReview.com.
Raise your hand if you are freaked out by what's happening in the banking world. Well, no, put your hands back on the steering wheel. It's all starting to feel like a house of cards. And what about that $17 billion, yes, billion with a B, dollars worth of bondholder money that was lost in that Credit Suisse takeover? Right now, I'm hearing more and more people talk about a flight to safety, and they're looking at gold and silver and other precious metals, but also rental property. Yep, income-producing rental property is starting to become sexy again. Guys, we've got an amazing loan program called the Landlord Loan. It's an easy way to acquire rental property. If you've got good credit and the assets, we don't even look at your personal income. We look at the income produced by the property. Assuming that it supports the debt, boom, you're a landlord. Check us out at MrMortgageRadio.com. That's MrMortgageRadio.com. My name is Mark Eitel, NMLS 1929005, and my team and I are here and happy to help. Check us out at MrMortgageRadio.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and this is the Mr. Mortgage Show. And guys, if you've got questions or comments, 855-462-7292. That's 855-462-7292 is the Anytime hotline, and you can call or text that number and get your questions on the air. And hey, before I go any further, just to finish up my thought on Peter's question about finding foreclosures, also, if you're looking for properties that are they've already gone through the process and they're being auctioned, HUDHomestore.com is a great place to find HUD properties that are being auctioned. And these are properties that are already all the way through the foreclosure process. And the other is auction.com, has a lot of foreclosure listings there as well. But again, these have gone through the process and they're being auctioned off publicly. So if your goal is to get ahead of that process, then that strategy looking for list pendants that we talked about before the break may work. But anyway, just wanted to finish that thought because I got pressed up against the break. So yeah, 855-462-7292 is the Anytime hotline. That's how you get your questions on the air, or visit MrMortgageRadio.com. That's MrMortgageRadio.com. Scroll to the bottom of the page, click that email icon, and you can shoot your questions over that way. But let's keep the questions coming. Hey, Jen, can you throw me another?
Kenneth is wondering, how do I know how much money I can take out with a refinance? I need to pay off some bills and want to do some updates. Thanks.
Hey, Kenneth, that's a great question. And a lot of people are wondering that very same thing because they have a ton of equity. And whether you're tapping it with a equity line or a cash out refi, the magic number is typically 80% of the property value. Now, in good times, the equity line might go to 90%, but right now, a lot of the equity line offerings have pulled back to 80. But with a cash out refinance, and we talk about the REC refi all the time, REC, and that's our refinance program that we developed, reduce, eliminate, and consolidate. And it's designed to do exactly what you're talking about, pay off some consumer debt debt, so you're reducing your monthly payments by either consolidating or eliminating some debts. And you can pull cash out with the rec refi for renovations, absolutely. But anyway, 80% of the property's value. So if you need to know what your property's value is and you don't trust those online, the big guys, if you will, go to mrmortgageradio.com and click on that free value report link. And if you give me your property address and your email address, I'll email you back a value report. And it's way better than one of those online estimates, but it's not quite an appraisal either. But it's, 8 or 10 or 12 pages of data. It's pretty interesting. But take that number and apply an 80% factor to it. So if it's $500,000, then 80% of $500,000 is what? $400,000. Wow, look, Mom, I paid attention in school. Woo, that took me a second. So, and then subtract your current loan balance from that 400. So if you owe $300,000 on a $500,000 house, you can extract about, give or take, $100,000 worth of equity out with a $400,000 rec refinance. So, but I hope that answers your question. If you need more info, you know how to reach us. Just shoot us a text, give us a call, or shoot me an email, and we can go deeper. Anyway, let's keep it rolling, Jen. We have another question?
Paula sent us this. I'm recently divorced after 11 years and just started working again. You talked earlier about a no-income loan. Will this work in my situation?
Hey, Paula, absolutely it will work in your situation. And that community program we use often for people in this exact circumstance, because you might have been running the household that entire 11 years and now you're back in the workforce and you're earning enough money to pay the bills, but you don't have the work history to qualify traditionally. And you might have gotten a big lump sum settlement in the divorce, so you've got the assets and you've got great credit. So yes, that no income loan program will absolutely work in this circumstance. And we use it often for somebody in your exact situation. So I hope that helps. And guys, we talk about it all the time, that a mortgage application is like a stool, right? A 4-legged stool is a very sturdy stool, but a 3-legged stool will still stand. And what I mean by that is the 4 legs of a traditional, conventional slam dunk mortgage. One is the property value, one is the assets, one is the income, and one is the credit score. But you only need 3 of those in most instances. So if you've got good credit and plenty of assets and the property meets the value, boom, that's 3 legs. We're going to be able to, in most instances, find a loan for you. So the no income verification loan is like a 3-legged stool. So I hope that helps. It's a great program for people that find themselves in that unique situation. So brilliant question. I appreciate it. Hey, Jen, do you have another question ready? Okay, go ahead.
Peggy wants to know, my husband and I are retired and could benefit from a rec refinance, but we don't have enough income to qualify. Do you think a reverse mortgage would be an option? Thank you, and we love your show.
Hey, thanks, Peggy. I do. I would need to know a lot more, but if I'm understanding what you're saying, you'd like to, the rec refi is obviously designed to pay off some credit cards and some other debt, right? But it's a fully underwritten loan, so you're going to need the income and the credit to qualify. So if your intent is to pull out some equity and pay off a bunch of debt, yes, I totally get it. And the reverse mortgage will allow you to do it, assuming that you meet the age requirements and you have enough equity. Then the reverse mortgage will allow you to pull out that equity at closing, pay off that consumer debt, and then if there's enough equity, you can keep the remaining available to you in like a credit line, for lack of a better word. It's in a reserve account for you, and it's earning interest. So yeah, the reverse mortgage may work in that instance because the reverse mortgage doesn't require a monthly mortgage payment. You do have to maintain your taxes and maintain your insurance. But if your goal is to get out from underneath a bunch of debt and you've got the equity in the property, that may be a great option for you. But you hear me say it all the time. The reverse mortgage isn't right for everybody just because you qualify for it. So I would welcome the opportunity to work through all the pros and cons and dig a little bit deeper with your exact situation, because while it might be something you qualify for, it might not meet your long-term goals as well as another option could. So, but brilliant question. My answer to it is yes. With the limited info that I have, a reverse mortgage may be an option that would allow you to accomplish your goals, but I would welcome the opportunity to talk more with you about it. So I appreciate that. Just reach out when I'm not on the air and we'll have a conversation about it. Thanks so much for that one. Hey, Jen, do you have another one?
Megan sent us this. Is it possible to finance a log cabin style house? It was built in 1992, if that matters.
Hey, Megan, that's a great question. Yes, most of the time it's not a problem. You know, it's got to be built to code and it's built with permits and it passes inspection. We've done FHA loans and conventional loans. We've done a couple down in Palm Beach Country Estates where there are a true log cabin style construction, and a couple in Okeechobee County. And they're very, very cool looking homes. And a lot of people think they're so unique that it's going to be difficult to get a mortgage, but there were no additional pricing considerations to the rate or anything because of the style of construction. It's not treated much differently than any other construction type, assuming that it was built to code. And the modern log home is a very, very well-built structure. So, and they're super cool, man. I've got friends who have one down in Palm Beach Country Estates, and it's like, going into an old Western TV show, right? Your Little House on the Prairie, if you will. It's a very, very cool property, and they're very cool folks. But I appreciate that question. If you need more information about that, just reach out. But we've done several in our area, and I'd be happy to help if I can. But great question. Hey guys, you hear the music? You know what that means? That's my cue. We'll be back in a few. Sit tight on the other side of this short break. We'll be back with more of the Mr. Mortgage Show. Hey, it's Mark Eitel, host of the Mr. Mortgage Show, and I'm going to interrupt this commercial break to ask you for a favor. If you know any friends, family, coworkers, or the guy in front of you at the grocery line who's talking or thinking about buying or selling or refinancing real estate, I'm hoping I can count on you to help me spread the word, introduce them to me, to the team. You can do that by simply sharing MrMortgageRadio.com. That's MrMortgageRadio.com. Guys, it's Mark Eitel, NMLS 1929005. Now, back to the commercials.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant file our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
Have you recently gotten a mortgage approval and now you're wondering, how do you know if it's a good deal? I mean, the wrong decision can cost tens of thousands of dollars in fees and interest rate. Is any of this negotiable? Is this a good rate? Guys, it's Mark Eitel, host of the Mr. Mortgage Show, and we are happy at no cost or obligation to you to take a look at that fee sheet for you. We'll go line by line through it, and one of three things will happen. One, we may congratulate you on getting an awesome deal, and then you can exhale and move forward knowing you did great. Or two, we may be able to point out some places in that fee sheet that you can go back and renegotiate a better deal with your current lender. Or three, and guys, this one's my favorite, we may be able to offer you even a better deal, saving you in fees or interest rate or both. Guys, there's no obligation. Just go to MrMortgageRadio.com. That's MrMortgageRadio.com. Click on that fee sheet review icon and we'll do the rest. It's Mark Eitel, NMLS 1929005.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and this is the Mr. Mortgage Show. And guys, thank you so much for your participation. Great questions so far this week. But if you're out there and you've got questions or comments, just call or text 855-462-7292. That's 855-462-7292. That's the Anytime Hotline. Or if you prefer to shoot us an email, just check out MrMortgageRadio.com. That's MrMortgageRadio.com. Scroll to the bottom of the page, click on that email icon, and you can shoot your questions over that way. And hey, if you ever miss us during the week, there's a lot of great info at MrMortgageRadio.com. Links to all of our digital platforms, the data that we use on the show each week, I upload to the Facebook group, and you can find all of that at MrMortgageRadio.com. But anyway, let's get back to your questions. Hey, Jen, do you have another question ready?
This one is from Sean. Can I get one mortgage for two houses? They are both on the same property. They are side by side. I think it's called a blanket mortgage.
Hey, Sean, that's a great question, my man. I need more information before I can answer it, though. But to answer your question, yes, it is called a blanket mortgage when there is one mortgage that collateralizes more than one property. But here's the thing, double check that that is indeed multiple properties, because sometimes it's just multiple structures on one parcel ID number, one PID. So if you go to your county's website and pull that legal description, make sure that it's not just one parcel with two homes or two buildings on it, if you will. There's a property in Mississippi that I was talking with a client about. It's 4 duplexes on one parcel ID. So that's going to be one mortgage, even though it's 4 individual duplexes. So I would need to just confirm that to dive deep with you on this particular question. But yes, a blanket mortgage will cross-collateralize more than one property. It's a little bit complicated. If it's 2 parcel ID numbers, it might be easier just to do 2 mortgages at the same time on the 2 individual properties. But I'm happy to walk you through the pros and cons of each strategy. I just need a little more info. So feel free to reach out when we're not on the air and I can deep dive that one with you. But I appreciate it. Hey, Jen, do you have another question?
Drew sent an email. I have student loans and have not had to make a payment since COVID. My bank is telling me they have to count a payment against me. This doesn't seem right to me. Is this true? Are there any loans that won't care about them?
Hey, that's a great question, Drew. And it gets a lot of people confused because your bank is right. So the guidelines require either 1% or a half of 1%, depending on the program, of your outstanding loan balance to be calculated as a monthly payment, even if you're currently deferred or payments, as was the case with COVID, were suspended. So a lot of people assumed that because they're not required by law to make those payments, we don't have to count that debt against you, and that's not the case. But there is a strategy that you may find interesting, and you can call your servicer, the company you make your payments to, and get what's called an income-based repayment plan. And they'll base the repayment not on the original interest rate and the original balance, but on your ability to repay. And oftentimes that number is far lower than the original payment or those percentages that the program guidelines require us to apply. So to use one recent scenario that we were involved in, we had a teacher with a load of student loans, and she was in deferment, and we had to use 0.5% against her debt to income calculation, and it just didn't work. There was not enough income there to make it work. And we had her negotiate the income-based repayment plan, and that number was like $43 a month. Well, then we used that actual number. So it was quite a big difference for her, and a lot of people don't know that that is even an option. So I'm happy to walk you through it and answer any questions you have. You might want to start by Googling income-based repayment plan for student loans, and you'll get a little better handle on what I'm talking about. But then your bank or your mortgage guy, or if we're blessed enough to be your guys, call us. I'll be happy to help you. But we would use just that number that is determined by the income-based repayment plan. So I hope that helps. It gets a lot of people wrapped around the axle. You're not alone in that. It's super, super confusing. But great question. Hey, Jen, can you throw me another one?
Ben sent us this text. Can I keep my house, rent it out, then buy a fourplex and use my VA entitlement on the fourplex? I intend on living in one unit and renting the other 3. I don't currently have a VA loan.
Okay. Ben, very, very well done. You've researched your question because you don't have a VA now, a VA loan. You have your entitlement. So I'm assuming you have your full entitlement in place. And you want to buy a 4-unit building with that VA loan, which you can do. Absolutely, you can move into one of the units, and that's a caveat. You have to occupy one as your primary. Brilliant idea, because you're now buying an income-producing property with 100% financing. And it's doable. You may be required to explain why you're moving, and it's got to make sense. So we've done a very, very similar scenario in the past, and the gentleman wanted to move to be closer to his son, daughter-in-law, and new grandbaby. And instead of just buying another house and having another mortgage payment and another set of bills, he wanted to keep his current home, keep all that equity that he had in it. He had a low mortgage balance and a low mortgage payment on it. So he rents that. He gets positive cash flow. And then he didn't want to have bills. So he bought a triplex, moves into one of the units, rents the other 2 out. And that property broke even. So the 2 rental incomes paid all the bills, and then he had the positive cash from his first primary. Now, the scenario made sense because he was moving to be closer to his children, or his son and daughter-in-law. So in that scenario, we got it approved, no problem. We used VA entitlement, 100% financing. Boom. He made it work. So brilliant question and brilliant strategy, my man. Way to maximize cash flow, minimize out-of-pocket expenses, and preserve the equity in your current house. That, my friend, is a brilliant strategy. Hey, Jen, can we squeeze in one more question?
April is asking, I've been listening to your back episodes and heard you explain the BRRRR method for buying rental properties. I love this idea, but I'm curious. How long do we have to wait after buying to pull the cash out to buy another property?
Okay, this is a great question. With the BRRRR method, it stands for buy, rehab, rent, refinance, and repeat. Now, typically the refinance was, depending on the loan program that you're using, could be as little as 6 months, but conventional financing put in place guidelines that now require 12 full months. But that's why it's super important to go into that first purchase with the strategy in place that you want to pull that cash out as quickly as possible to go buy another property. And guys, if anybody has questions regarding the BRRRR strategy or the landlord loan, those two play very, very well together. And 6 months is usually what it takes to stabilize that property and cash out to go buy another one. But brilliant question. Hey guys, you hear the music? You know what that means? That is, well, no, that's not my cue. We'll be back in a few. We'll be back in a week. Wow, that's the end of another Mr. Mortgage Show. Guys, what a great show this week. Thank you for your questions. Thank you for your comments. If you need us during the week, check out MrMortgageRadio.com. That's MrMortgageRadio.com. Have a great week. We'll see you next time right here. Same bat time, same bat station.
That's a wrap. Join Mark Eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages right here on The Mr. Mortgage Show.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show, and I'm going to interrupt this commercial break to ask you for a favor. If you know any friends, family, coworkers, or the guy in front of you at the grocery line who's talking or thinking about buying or selling or refinancing real estate, I'm hoping I can count on you to help me spread the word, introduce them to me, to the team. You can do that by simply sharing MrMortgageRadio.com. That's MrMortgageRadio.com. Guys, it's Mark Eitel, NMLS 1929005. Now, back to the commercials.
Have you recently experienced a shocking rate increase on your homeowner's insurance policy or received a dreaded cancellation notice? It feels like you're being priced out of your own home, doesn't it? Well, worry no more. Introducing HOIPolicyReview.com, the website designed specifically for people like you. We understand the frustration and financial strain these situations bring. That's why we're here to help. With HOIPolicyReview.com, all you need to do is provide us with a few details about your home and current policy, and we'll take care of the rest. Our team will tirelessly compare dozens of carriers against one another, ensuring you receive the best quote possible. Don't let rising rates or cancellations force you out of your home. Visit HOIPolicyReview.com today to take the first step towards securing the insurance coverage you need. So don't wait any longer. Go to HOIPolicyReview.com and get started today. Remember, we're here to help you find the insurance solution that fits your needs. That's HOIPolicyReview.com.